Welcome to Inside India. I'm JP Ong, and here are your headlines. We are just 1 hour away now from the first U.S. government shutdown in 7 years after the Senate failed to pass a stopgap funding bill. U.S. futures are still under pressure, and gold is once again hitting fresh highs. The Reserve Bank of India widely expected to hold rates steady today, but some think it might be a close call. LG Electronics' India unit filing for an IPO now in Mumbai. The long-delayed high-profile listing is looking to raise up to $1.3 billion. And crypto is losing some of its bounce today as we barrel towards a government shutdown stateside. But how will that impact the industry? Elaine Yu is on the ground at Token 2049 in Singapore to find out, well, what about crypto? Elaine?
I'm live here in Singapore, and the question of the government shutdown is looming, but the crypto industry heavyweights are gathered here to discuss everything from institutional adoption to the future of decentralized finance.
Good morning and welcome to the show. The U.S. government is set to shut down in just an hour, midnight Eastern Time, October 1st. There was another Senate vote late on Tuesday night, and a Republican bill to extend funding past the current deadline did not get enough votes to push through. Both parties struggle to bridge their divide.
A few moments ago, Republicans once again rejected Democrats' proposals to avoid a shutdown, fix health care premiums, and spare Americans the calamity of skyrocketing through the roof health care costs. Republicans blocked it again.
This truly is a Democrat-owned, Chuck Schumer-owned shutdown. There's no negotiation. It's a shakedown when he asked for $1 trillion for 4 weeks. It's absurd.
A look now at Asian markets, and do know that markets in Hong Kong and China are closed today, and China is getting a week off because of the Golden Week national holiday period. Other markets, though, well, they're looking a bit skittish today, and we are seeing a bit of a sell-off actually in Japan. The Nikkei 225 now taking a 1% step back in the morning session out in Tokyo. The ASX 200 also looking a bit shaky today, down by about 0.33%. A bit better, though, for the South Korean Kospi, up by about 0.7%, and we're seeing the Taiwan TAIEX actually up by about 0.9%, so a little bit split actually today's session. Tokyo and Sydney taking the brunt right now, while Seoul and Taipei looking a bit more solid, that is, or a little more stable as compared to their other major peers. And Indian markets all set to come online in about 45 minutes. Here's what GIFT Nifty futures are now indicating. And again, we take note of the fact that GIFT Nifty futures are once again hopeful for a possible gain from yesterday's close. But keep in mind that the Nifty 50 is now on 8 straight days of losses and also a close at 24,611 points. They are foreshadowing perhaps a 150-point bump up actually later on. But again, it's scant foreshadowing as to whether or not we will see an intraday them close in the green. Meanwhile, the Indian rupee also just softening against that stronger U.S. dollar in today's session. They're now at 88.83 against the greenback, and again touching new record lows once more, or testing new record lows again. And we'll see if it continues to find more room to weaken and soften as the day progresses. GIFT Nifty futures you see on screen now will be offering contracts also to foreign investors via a tax-neutral jurisdiction. This as it pushes to attract more global funds and diverge from stricter equity derivative rules at home. The National Stock Exchange has also introduced daily expiry on the GIFT Nifty contracts. LG Electronics India is also set to launch one of the country's biggest IPOs this year, seeking a valuation of up to $8.7 billion. The company has fixed a price band of 1,080 to 1,140 rupees per share, with the issue opening October 7 and anchor bids a day earlier. The IPO will raise up to $1.3 billion for its Korean parent, which is selling a 15% stake. No new shares will be issued. The offering comes amid a busy IPO month, with Tata Capital and WeWork India also hitting the market. LG is India's second largest appliance maker, and it competes with the likes of Whirlpool and Samsung in a sector that's expected to grow 12% annually until 2029. Meanwhile, U.S. Trade Representative Jamieson Greer says India is starting to diversify its oil imports away from Russia. The comment comes as New Delhi's continued reliance on cheap Russian crude remains a major sticking point in its trade negotiations with Washington, D.C. Some local media reports say U.S. energy giants, including ExxonMobil and Chevron, are eyeing entry into India's LNG infrastructure business, taking advantage of the pressure on New Delhi to diversify its energy sources. On to one of our top stories of the day, and we will get the Reserve Bank of India's policy decision within the next hour. CNBC TV 18's Ritu Singh joins us now from Mumbai with a preview. Ritu, thank you so much for joining us again. Just straight to it, I guess, what are the expectations when the RBI finally decides to make a decision as to will they or won't they cut or raise later on in just about an hour and change?
Well, you know, it's a very close call this time around. Our poll was clear that there would be a pause, although a not insignificant section of our respondents do expect a 25 basis point cut from the RBI. You know, a whole lot has changed in the couple of months since the last policy was announced in August. The 50% tariff hit, that is the biggest one. And then, of course, every day we are hearing about these H-1B visa-related issues that could impact our services exports. You know, and now there's tax on films, on, you know, kitchen cabinets and whatnot. And on the positive side, the GDP numbers in the first quarter were better than expected, and the important goods and services tax rate cut that the government has delivered. So it's a bit of a dilemma for the Monetary Policy Committee. You know, those that are in favor of a cut say that the central bank ultimately is an inflation targeting central bank. So as a forward-looking bank, it should use the headspace available to cut rates by 25 basis points, especially given the potential impact growth could see from these tariff headwinds. But those that are in favor of a pause say that, you know, right now RBI has already done enough. It's given about 100 basis point rate cut, ensure that there is ample liquidity. And so it may be more prudent to wait and watch how these tariff related talks pan out and, you know, how growth really gets impacted, you know, to keep the powder dry and cut rates when the economy actually needs help. So, you know, the bigger challenge, however, will be even if the RBI pauses, how does it communicate that, you know, it will remain dovish because the growth number is expected to actually be revised upwards. So how do you say growth will need help? You know, on the GDP front, you know, the forecast is currently at 6.5%. The wider majority is expecting an upward revision for statistical reasons, given that, you know, the first quarter numbers were much better than expected, and inflation is expected to be revised downwards from 3.1% at the moment. But a close call nonetheless. The markets will be very happy if there is a cut. But in the base case scenario, if there is a pause, they will hear or watch out for a dovish pause.
Yeah, and it's a strong case, it seems, for either scenario, whether it be for a cut or a pause, actually. But Ritu, I want to move on and ask you about the variable rate repo auction that the RBI is also conducting. Tell us more about this and why this is an important thing for us to track.
You know, the variable rate repo to inject liquidity in the system, you know, what the RBI has been doing, you know, for most of September, bit of an anomaly, but this is a temporary phenomena because, you know, the systemic liquidity has been in surplus for most part of the year. It's only now because of advanced tax flows and some of the GST outflows that the system has been in a bit of a deficit, which is why you've been seeing RBI come in and conduct overnight 2-day, 4-day variable rate repos of 1 to 1.5 trillion each, you know, every other day to ease liquidity in the system. And if you look at the auctions, I mean, today there is a 1 lakh crore or 1 trillion rupee auction that the RBI will conduct. Banks are not really seeking the entire amount. So it is really to ease, you know, the liquidity at the ends. Not much to be made from this. This is a temporary phenomena which is expected to get better as government spending picks up.
Yeah, and you can't accuse the RBI of being lazy at all, Ritu, because they've been quite busy from a policy decision to these reverse repos. And they're also said to be easing lending norms now. Tell us more about that bit.
Well, on the lending norms front, essentially, you know, banks were mandated to link the, you know, lending rates, floating rates for personal retail loans and micro, small and medium enterprises, small business loans to an external benchmark. Previously, they were only allowed to reset the spread on these rolls once in every 3 years. Now, the RBI has eased that to say you can reset the spread earlier than 3 years. Apart from this, there's a bit of easing when it comes to gold loan lending as well. Gold against record highs and lending against gold has also gone up. So earlier, you know, RBI had only allowed banks to lend working capital to jewelers that were using gold as raw material. That has now been expanded to other manufacturers that may be using this. And of course, the repayment tenor for gold metal loans for jewelers has also been proposed to be revised from 180 days now to about 270 days.
All right, a lot of things on the plate of the policymakers at the RBI, and we'll have to wait for within the next hour and a half to see what they do. Will they or won't they cut, actually? Ritu Singh from CNBC TV 18, thank you so much for those important updates as to what is keeping the RBI busy this midweek. And speaking of gold, the precious metal tearing through another record high yet again. Right now, we're seeing the safe haven of choice, it seems, in the markets this year at $3,861 per troy ounce. Steady she goes as it climbs, but now up about 45% over the last 12 months. And again, the case again for safe haven demand in portfolios seems to be growing once again because of the uncertainty that might be unleashed by a looming potential U.S. government shutdown in just about 50 minutes. And we're seeing gold again reiterating its case as a safe haven stabilizer in many portfolios. Well, coming up, Anand Rathi's brokerage arm made its debut yesterday with shares surging over 7% on day one. But with SEBI tightening market regulations, what's next for India's brokerage industry? We will discuss more on the other side of the break. Stay tuned. And welcome back to Inside India. The Indian market regulator is now giving brokers more time to roll out algorithmic trading for retail investors. The market regulator has extended deadlines for stockbrokers to upgrade their systems before algo trading goes live through API-based platforms. Brokers must also register at least one algo strategy with exchanges by the end of this month. Algo trading has seen big returns. A SEBI study shows it accounted for over 95% of profits made by foreign and proprietary traders in futures and options just last year. Meanwhile, a new SEBI survey shows that less than 10% of Indian households invest in the securities markets, including stocks and mutual funds. Out of nearly 92,000 households surveyed, a staggering 80% said they prefer capital preservation over higher returns, citing low risk tolerance. Penetration is higher in urban India, 15% in cities, and 23% in the top metros. Interestingly, more than half of non-investors are aware of market products, and 22% say they plan to invest in the future. SEBI's report says this could further expand the retail investor base. And moving on, shares of Anand Rathi's brokerage arm made a remarkable debut on Tuesday, up 7.6% on day one of trade. Strong investor demand drove the offering, which was oversubscribed by more than 20 times. Institutional investors led the subscriptions, whose portion was subscribed nearly 44 times over. Retail investor subscription was a bit more muted, though, but was about 5 times oversubscribed in that particular section. The listing comes after SEBI tightened broker regulations in recent years with stricter disclosure requirements and tougher surveillance measures aimed at reducing market risks. For more on this IPO, we're joined by none other than Pradeep Gupta, the chairman and managing director of Anand Rathi Share and Stock Brokers, a day after this remarkable or memorable day at this for the brokerage heavyweight. Pradeep, thank you so much for joining us again. Congratulations once again with the IPO and the public listing. 7.6% up on day one. Are you satisfied with how Anand Rathi shares did on their first day at school?
Thank you and good morning to all the CNBC Asia viewers. Yeah, we are definitely satisfied the way the listing has happened of our company because of a simple reason. In these kind of a choppy market, when probably market sentiments are a little bit subdued, I think most of the IPOs are, either almost at their price or a little lower than their listing price, issue price. So it's kind of a satisfaction, definitely a satisfaction, about 7% higher than your listing price, yeah.
Okay, now it was highlighted, I believe it's about 7.5 billion rupees raised actually, and most of this will go to general expenses and working capital. It seems a bit general there. Can you give us more color as to where the funds are really going to be directed and how that's going to support Anand Rathi's strategy or vision moving forward?
Yeah, basically this whole fundraise, about 750 crore is requirement of our working capital. In India, what is happening is from last almost 10 years, this whole industry, broking industry is becoming more and more capital intensive, where more capital is required. And largely this capital requirement is for, getting limits, providing margins to various regulators, to the exchanges, for getting limits for our customers and clients, and as well as to fund and finance margin trading facilities through margin trading facilities to our customers. Now, this margin trading facilities is being provided for those kind of customers who are dealing in cash market segment. And that's where it's a kind of a CC limit over here. They can place the shares and against that place as and when they require, they want to invest or they want to probably trade in a certain security and they do not have funding, they can probably draw this fund and utilize that fund. And that's what is happening in India. That trend is little bit emerging. For example, in past almost 4 to 5 years, if you really see, overall, market book position of this MTF has gone to almost more than 1 lakh crore. So I think that is where this whole trend is emerging, and that's what, for that required a capital, and for that reason we have raised this particular capital. And part of the money obviously is going to be required to strengthening our, technological aspects and process aspect of the company.
Now, Pradeep, this also comes at a time when India's stock capital markets, especially the equity space, seems to be growing by leaps and bounds, one of the 5 largest now, I believe, in the world. And also, a number of guests we've actually spoken to in recent weeks have said that the retail investor in India, the domestic investor, seems to be taking a more prominent role, actually. But as you saw a while ago, SEBI noted that only 10% of Indian households trust securities or have put their money in securities at the moment. Why do you think there's still been a hesitance? And if India's capital markets have grown this much, only 10%, how much more growth can be expected if you can unlock that? What are your thoughts, given you run one of the more prominent brokerages out in India right now?
So, yeah, it's a very good question. I think if you really look at it, India as a demography, I think almost 10% have started looking at equity as an investment, right? Over a period of time, I think this is going to increase, and there is a huge big gap if you really compare with 33% from China or probably other markets like US, where about 50% investments are flowing towards this kind of asset class. So I think there is a huge gap. The challenge over here is gradually people have started learning, understanding these markets, and have started having a faith that from a long-term perspective, there is going to be a money which can be created. So it's a kind of an education which is happening, and over a period of time, people will start looking at it. That is first point. And second point also, so far your, per capita income or your savings are increasing over a period of time, people have started, the way you are seeing GDP growth, people also have started having investor surplus, and they have started looking at saving and saving instruments in the various different asset class, and that's what is going to happen. So I'm pretty much bullish, and I'm pretty much confident that over a period of time, this population is going to increase. This ratio of 10-12% is definitely going to and bound to increase from here onwards. Now, coming back to, protection from a regulator perspective, I think regulator is also doing large businesses which are happening or which had happened in the past, largely by these investors more than investments. I think those were being, driven towards trading volume side. And because of a trading volume, it's a derivative market. That is where you have seen as part of volumes. And that's where probably this derivative market is something which is required by those people, and should be invested by those people who understand that market really well. And that kind of education and understanding is a little low with the retail investors, and they have burned their fingers and they have lost. So I think that to catch that or to tap that, and trying to see that money should flow towards investment side is something the regulators are trying to keep. And I think cash market is something which is going to grow. If you really see past history, a decade history, about 10%, about 18 to 19% kind of a growth had happened in the cash volumes. And I believe that percentage is going to grow over a period of time also, minimum.
Now, Pradeep, you mentioned the role of the regulators, actually, and that's because while they've tried to liberalize the markets more, they've also tightened the guardrails because maybe there are also growing risks. As you see this investor base grow for the most part, they've also tightened the guardrails on algorithmic trading platforms. I have a question. Does Anand Rathi have an algo trading platform that might fall under that jurisdiction? And is this perhaps making things more challenging or actually more helpful, given the fact that you've launched this IPO during a time when there's been tightening guardrails and standards, that SEBI seems to be introducing right now?
So we at Anand Rathi, largely our philosophy is to address the investment need and investment demand of the investors, largely from those investors who do understand. We are catering to almost all category of customer, from retail, M&I, HNI, corporates, and institution, as well as NRI. So what we do, whichever product fits into the basket of various different segment of the customer, we try to give them. So to answer your question, so far algorithmic algo platform, whether it is available, we are capable to give it to our customers. Yes, it is available, but we are very, very cautious while giving this platform to a retail customer. We are trying to give to those customers who do understand this world well and who can use these platform really well. And this is going to help us in a big way in future, because these regulatory changes which had happened in this space is going to help us in a big way to provide this platform to those customers who understand this really well.
Right. And, a lot of these concerns also seem to be aligned with the current state and the evaluation of investors with regards to Indian markets. In fact, Kevin Sneeder of Goldman Sachs spoke to us earlier this morning at the Silence of the Milken Institute forum. He talked about some questions that their clients have when it comes to the Indian market. I'd like you to take a listen to this, Pradeep, and give me your thoughts when we come back from it. Just listen to what he said.
Okay.
What's going to happen to the foreign investor? The domestic investors are certainly crowding into the market. It's an expensive market. You look at the forward PE ratio, it's very expensive relative to others. So it shouldn't be a surprise that it's come off. The geopolitical dimension does get discussed because much of the optimism around India includes the Make in India, the manufacturing heartland of India. So investors want to understand, how will that get resolved? They hope it will get resolved, but that's a question. And the third question, of course, will be around, how does the consistency of regulation, conformity with international standards, how does that play into the way in which you invest? Those questions are being asked. They're the other side of this general optimism and continued investment, particularly by private markets. If you look at the private equity arena, 100 billion into India, it's a huge increase over previous levels.
Now, Pradeep, to be fair, Kevin Sneeder is positive on Indian markets long-term, but he did say those are the three major questions: valuations, regulatory reforms, and also geopolitical uncertainties at the moment. Do you agree that these might be some of the challenges that India will have to overcome to unlock that long-term optimism or improve long-term optimism?
Yeah, I personally feel all these three questions are valid, but in a very limited period. I mean, if you really look at it, I think the present regulators, presently in past almost a decade, from a government side also and from a regulator side also, they are keep on and constantly looking at to provide a ease of doing business over here in this country. I think the whole environment is such and being created, and I believe in present times, I think that era is going to be continue. So I think over a period of time, I'm really optimistic on that particular front. So far, valuation is concerned. Obviously, this whole valuation game is, depend on three counts. One is sentimental, liquidity, and fundamental. I think one has to believe on a fundamental factor from a long-term perspective. And that's where, I mean, I as a person and we at Anand Rathi as a person quite positive from a long-term fundamental perspective. So far, sentimental liquidity is concerned, sentimental will keep on hovering on this particular market, whether it is domestic sentimental issues or probably geopolitical or world market issues. I think that will keep on impacting on a short-term basis, and that correlation is absolutely bound to happen and is going to be seen in domestic market. But the issue is, I think, and I personally believe, the impact of those kind of sentiments in relative terms, if you really look at the world market, is going to be little less.
Yeah. Pradeep, just very quickly here, you're not the only IPO market, IPO in this robust pipeline. You've got likes of LG Electronics, India following, and a number of others. How excited is this making you guys? Just very quickly in about 20 seconds, because we're coming to the hard break, sir.
Yeah, I think these are good companies coming for an IPO. One has to look at valuation, but yeah, I think we are pretty much excited because a whole lot of liquidity which is available in the market, and they are looking at these kind of a new companies who are going to get listed and raising funds for the growth of the company as well as the country.
All right, Pradeep Gupta from Anand Rathi Brokers, thank you so much for joining us. Congratulations again on the listing. We'll see if you can make it 2 for 2 in the green when the markets open in about 20 minutes later on. Well, we'll take a quick break now, but we'll be back in about 2 minutes with more stories here. And as we count down to the market open in India, this is how we are shaping up ahead of the RBI's very important decision. Don't go away. You're still watching Inside India. Welcome back to Inside India. We are counting down to the market open in India, and this is how we're shaping up ahead of the RBI's decision, that final check of GIFT Nifty futures, again showing renewed optimism, it seems, and they're also foreshadowing once again an intraday gain from yesterday's close. But keep in mind the Nifty 50 is on one of its longest losing streaks in about 7 months actually. And again, it seems that sentiment seems to be a bit more skeptical out in Mumbai, and we'll have to wait for the RBI's decision later as to whether they will or won't cut sometime past the 12-hour Singapore-Hong Kong time. Indian rupee, though, it's looking a bit firmer now at 88.77, just stabilizing itself after the dollar's overnight surge. Now, a quick check also on cryptocurrencies. As we wait for that board, we just want to see where the major cryptos are actually trending, and we're seeing a gain. That is, Bitcoin seems to be up the most, up by about 0.25% now. 114. If you got $114,510, you can afford a Bitcoin. It seems Ether also up by about 0.1% today, while we're seeing XRP looking a bit glum actually. They're down by about 1.1%. They are the negative Nancy of that board right now, but overall cryptos seem to be just staying afloat and finding some room to just inch higher. But crypto is losing some of its bounce still as we barrel towards that government shutdown stateside. Well, let's head out to Token 2049 here in Singapore, where crypto leaders from across the world are discussing this very possibility. Elaine Yu is standing by there right now. Elaine, you've had some time to digest what some of the discussions and the whispers are on the sidelines of Token 2049. What are they saying, and is the tone a bit defiant or a bit concerned right now?
The tone is largely shrugging it off when it comes to the U.S. government shutdown that is looming and what its impact could be on crypto regulation that the industry has been awaiting. I posed that question to Paolo Arduino, the CEO of Tether, and he said that government shutdowns in the U.S. have happened a number of times. And I also asked Charles Hoskinson, the founder of the Cardano blockchain and a co-founder of Ethereum, and he also played it down, and they're more excited about the crypto legislation that are going through the U.S. government now, and they think that this will not really dampen momentum here. Of course, they're out here in Asia, but they also sort of zoom out, see this as the center of gravity, tilting to the U.S., this industry with regulations around stable coins, the Genius Act on stable coins that the industry is very much welcoming, and also the Clarity Act, what will establish a regulatory framework for digital assets other than stable coins. It's passed the House, still waiting for Senate action, but that is also welcomed by the industry, and they also point out that they have drawn bipartisan support. So we're not really hearing concern about that out here, but of course we'll have to see how this government shutdown goes, how long it lasts, and if it will indeed derail any crypto regulation. But the participants of the industry aren't thinking that, JP.
Yeah, Elaine, I'm ashamed to say that you probably learned more about crypto over this morning than I actually know, but I'm trying to catch up. What I do know is, and what I do surmise though, is that crypto tends to benefit whenever, and has actually posited a case that it might also be a possible safe haven asset. And with the advent of possible rates coming down in the United States, that also might give it breathing room. Is there optimism that we might see a further thawing of that crypto winter we just saw just a year ago? They're generally very bullish by nature, but again, is the ever-present bullishness in the crypto space perhaps a bit more founded now, given the fact that there's a lot of this uncertainty that could support a run-up in crypto for the most part?
So there is uncertainty around crypto always, but now, and I was talking to Paolo Arduino from Tether as well, and he's interested to find out more about, beyond the headline market sentiments, the optimism there. What are people really thinking? Are we going to see a big bull run on crypto? Those are questions that don't really have answers there, and he's keen to find out more here. What's stopping Bitcoin from rallying further, as that was quite widely expected when the Trump administration moved more positively with some pro-crypto regulation, but also because crypto is becoming more and more mainstream, especially with inflows of institutional money, institutional investors, really some of the more traditional ones starting to dip their toes into this, including sovereign wealth funds to family offices who are now sizing up this space now. And also you've got the BlackRocks, the Franklin Templeton's. BlackRock's launched its first tokenized fund on the Ethereum network, and Franklin Templeton is partnering with Binance. So all of this institutional investors and institutional players going into crypto are really sort of changing the nature of the industry a bit, and there's been a debate about whether Bitcoin will follow this traditional 4-year cycle around its pricing, which has revolved around this event called halving. So we'll usually see a 4-year cycle on its price, but now a lot of people are saying that with more institutional investors coming into the space, changing the profile of what a crypto investor is, it is no longer tied to these traditional cyclical developments that we see, and it could just mean that a crypto or Bitcoin could really act, could have a bit more correlation with risk-off assets, but also sort of seeing new patterns here. So a lot of different themes, of course. It's not just the institutional adoption side of the story, but also decentralized finance, decentralized exchanges, and that is something that I'm also sort of eager to hear more about, since, you know, for the institutional guys are very happy about regulatory clarity, but, you know, how does the DeFi world see this, JP?
Yeah, and of course, so volatility also part and parcel with regards to cryptocurrencies, and how you handle that is going to be essential as well. But we'll have to leave that conversation for another day, or perhaps tomorrow, Elaine, actually. That's Elaine Yu on the sidelines of Token 2049 with the latest with regards to what the crypto space and major investors and crypto institutions are talking about, are mentioning with regards to that possible shutdown in the United States. And speaking of that, the U.S. futures right now, and we want to take a quick peek at where it's actually trending. We're seeing that right now futures are showing an implied open where most of these indices, major indices from the S&P 500 and the NASDAQ seem to be flashing shades of red, and perhaps some risk-off sentiment hitting equities out in the United States. And remember, as we barrel towards a U.S. shutdown at the top of next hour or midnight Eastern time, unless there is a deal that can be agreed, well, we're in for a shutdown, it seems. Let's parse the impact of this shutdown. Staffing will be affected first. Both the National Transportation Safety Board and the Federal Aviation Administration have said they're furloughing about 25% of their staff. Legal agencies like the police will be fully funded, but military personnel could work without pay. Analysts estimate upwards of 700,000 workers could be furloughed across agencies. During the last shutdown, during the previous Trump administration, around 340,000 employees were furloughed. It lasted about 35 days and cost the economy about $3 billion. In terms of markets, key data releases could be delayed or canceled, like non-farm payrolls report due out on Friday. Without crucial data, the central bank is flying blind, which could mean no changes to their economic projections over the coming weeks. The U.S. SEC will be operating at about 9% of its current levels, which could affect market regulation and IPOs. Tariff revenue would still be collected, though. We'll be back in about 2 minutes with more on the markets and the response to the potential government shutdown in the U.S. Don't go away. You're still watching Inside India. Welcome back. Energy transition is one theme that's being discussed not just in India, but globally. Despite net zero pledges across Asia, coal still fuels about 60% of the region's electricity and accounts for over 90% of power sector emissions. The biggest challenge? Mobilizing innovative capital to modernize outdated grids and scale clean alternatives. So let's zoom in and look at how Indonesia is tackling this transition in particular. In fact, we're joined now by Rahmat Khaimuddin, who is Indonesia's Deputy Coordinating Minister for Basic Infrastructure, joining us from the sidelines of the Milken Asia Summit here in Singapore. Mr. Khaimuddin, thank you so much for joining us today. Just energy transition is something that's very important, and it brings me back to some conversations I actually had about 2 years ago, because I posed this question to the Prime Minister of Malaysia, Anwar Ibrahim, as to whether or not developed countries are doing enough, can do more to support just energy transitions with just financing for developing countries like Indonesia and Malaysia. He said at that time in 2023 that he didn't feel that was the case. It was also similar sentiments when I asked that of INA's Ridha Wirakasuma also 2 years ago. In the last 2 years, do you think that things have changed? Do you think that things have improved with regards to financing and support for just energy transitions for countries like Indonesia?
Yeah, thank you, JP. I think in general, there are some progress that's being made in the energy transition, especially in Indonesia. So if you remember the conversation in the past few years, bottom line, to do energy transition, what is needed will be basically the pipeline of project, which is showing the ambition of the country, and then the availability of affordable technology to be implemented, and as well as the capital that is available, not only on market-based market rate capital, but hopefully also some concessionalities that is available to basically execute all these projects. For Indonesia case, what we have done in the past couple of years is that we have started implementing more and more through financial closing some major floating solar power plants, as well as geothermal. So more investments in that sector. We also have updated our long-term electricity plan from PLN, our state grid. Basically, today we have about 75 gigawatt of capacity, but in the future, in the next 10 years, we want to build additional 69.5 gigawatt of capacity, whereby about 3/4 of them will be battery storage and renewables. So all of this showing that there are progress moving to the right direction. Again, but in terms of innovative financing, I think there's a lot of discussion. We know that there are plenty of capital ready to invest in electricity sector, clean electricity sector. But if you think about the concessionality or the type of financing like transition financing or carbon credit, unfortunately, today I think there's still a lot of work to be done.
Right. So I guess that was my question right there, Mr. Khaimuddin. Do you think that developed nations have become more receptive to the need for just energy, just or more accessible financing, so that countries like Indonesia can meet these lofty energy transition goals and net zero goals? Have things improved? Are more countries perhaps, or more institutions in developed nations perhaps extending more help now to Indonesia as compared to 2 years ago?
Yeah, I would say the situation is a little bit more challenging given the geopolitical situation, especially on some countries that basically giving very clear signal that climate change is probably not a priority in the economic sector for now. But the good thing is that I think the countries like that are minority. So we kind of facing a headwind at the moment on that.
Minister Khaimuddin, I think the question now also is, because while Indonesia is trying to meet these lofty energy transition goals, you mentioned a while ago that it seems that the West, not the West, but developed nations and other institutions seems to have cooled off on energy transition. Has Indonesia cooled off, or is this still a priority for the current Indonesian government to meet these goals, despite the fact that perhaps the broader public perhaps seems to be shying away from some of these climate change and energy transition initiatives?
Well, Indonesia is a country that basically ratified Paris Agreement, and we will continue to try to fulfill our commitment in the Paris Agreement. And of course, what we want to do is how can we execute that or realize that commitment while ensuring that our development goals is also being achieved. So for Indonesia, I think we are working very hard also to comply with our climate commitments.
All right, Mr. Khaibuddin, I have a question with regards to Indonesia's own power state, because you have growing power needs as well as a fast-growing country. But there are some who actually say that Indonesia, parts of Indonesia, might actually have an energy surplus, like in Java, and that perhaps one of the challenges for Indonesia right now is trying to make sure you can distribute some of that surplus to other far-flung places, like, say, Sulawesi, for instance. How important is building up good infrastructure to making sure that energy not only is produced for Indonesia, but can also be distributed across this challenging 17,000 island archipelago?
Yeah, as you probably know, Indonesia has 17,500 islands, and definitely creating a nationwide grid may not be practicable. What we do have is some, major islands grids, and in order to basically create more future-proof or renewable-ready grids, definitely we need to invest. One thing that is good about Indonesia is that we are blessed with significant renewable potential. Our estimate is about 3,700 gigawatt on renewable alone. Majority of them are solar. We are a country in the equator, so we have sunshine that is shining almost all year round. Some wind, but also quite significant geothermal and hydro potentials in the country. Of course, bringing those potential renewables into the demand center will require certain type of transmission, will also require certain type of energy storage, especially, for example, on solar. So the technology, the investment on those type of transmission, distribution, and grid system will be required.
And Minister, given the fact that you're the Deputy Coordinating Minister for Basic Infrastructure, I'm curious as to what the infrastructure gap is in Indonesia right now, and what other areas Indonesia might need to address with regards to making sure that the infrastructure can support the country. What other areas do you think Indonesia needs help in or investment in with regards to improving its infrastructure?
Yeah, so I think in the past 10 years, Indonesia has invested quite a lot of our resources into infrastructure, building a lot of toll roads, ports, airports, and whatnot for connectivity. Obviously, in the next, in this administration, next 5 years to 10 years, we are actually planning to continue our economic development, and there are new priorities given to the from the president to us, basically on improving energy security, water security, as well as food security, while also maintaining our economic growth, even improving it. The goal is to reach 8%. And also doing a lot of intervention on human development. So basically, we have all these programs like nutritious food program, improving housing situation in Indonesia and whatnot. So there's a lot of I would say projects that is going on, because in order for us to continue growing, we'll definitely need to build more connectivity to reduce our logistic costs and whatnot, right? Now, where is the focus? I think the current focus, immediate focus today is that we are looking into all these areas whereby we can improve production in food, for example, or energy, as well as the downstreaming in our mineral resources. Those are typically outside of Java Island, and we want to make sure that all the type of investments that we do there will be supported by proper infrastructure.
So just quickly, Mr. Khaimuddin, do you think that the 8% GDP growth is achievable? Because there are signs that perhaps Indonesia might struggle to actually fund that goal. Just very quickly in a minute, do you think it is achievable to hit 8%?
Sorry, can you repeat that again, JP?
8% GDP growth, Minister Khaimuddin. Is that realistic for Indonesia? Because it is a very lofty goal, and there are signs that perhaps Indonesia might struggle to actually achieve 8% within the next 5 years.
Yeah, I think one thing that we can say is that Indonesia has achieved that in the past, and so that is not something that is impossible. But of course, it will require hard work. We need to conduct multiple things. We need to make sure that, as you mentioned, the infrastructure to achieve all this work that needs to be done is well done. For example, we also need to make sure that we can attract investment. So some deregulations will be required, but we need to have stretch target, and yeah, we're going to work towards that.
Rakwat Khaimuddin, Indonesia's Deputy Coordinating Minister for Basic Infrastructure. Thank you for joining us here on the sidelines of the Milken out there. And we hope you have a good summit next couple of days at the conference. And again, just tackling some of the infrastructure gaps and priorities of Indonesia and why it's key for Indonesia's overall economic priorities and economic growth. Well, Indian markets are coming online now, and we're seeing that the Nifty 50, 8 minutes since the opening bell, well, they're trading flat to the upside now at 24,628, perhaps a bit of a wait and see and a bit of a sluggish attitude right now from traders out in Mumbai. And we'll see if they can actually try to lift off and break through that multi-day losing streak that they've been on for the better part of the last week and a half. The Indian rupee also trying to find its footing now at 88.76 against the US dollar. Again, early days or early minutes for Indian markets. And again, the big question is, will they be able to break out of that multi-day slump that's really caught the Nifty 50 in a bit of a funk in today's session? And once again, government bond yields ahead of the RBI's decision due in about half an hour. Take a look at where the 10-year is now trending. It's just easing now to about 6.56%. Now, many are expecting that they will hold off on any possible rate cut. But again, it is too close to call because, again, the case for a rate cut and to support India against a lot of the economic uncertainties remains quite strong, especially given that inflation continues to trend lower. But again, those very uncertainties might also keep the RBI a bit cautious and prudent later on. Indian state-owned engineering consultancy RITES Limited has signed an agreement with Etihad Rail and its subsidiary NICC. The pact is to expand cooperation in the mobility and rail infrastructure sector across the UAE and beyond. The agreement was signed on the sidelines of the Global Rail Transport Infra Expo in Abu Dhabi. And we're seeing here that RITES Limited shares now up by about 2%, but they do have a long way to climb out of that 12-month hold. They're still down about 25% since in about 12 months. Now, the U.S. government shutdown deadline is also coming closer, and Treasury yields right now, just one final check again, because this will be the moment of truth. In about 6 minutes, we're going to find out whether or not it's a shutdown. 4.15% now. It has climbed to that particular level, while the 30-year bond yield has fallen to about 4.73%. The trend from the short end of the yield curve up to the 10-year tenor seems to be up at the moment. And again, if we do end up with a shutdown, we might see more of a risk-off sentiment favoring some of coming back, and also Treasury yields again indicating that perhaps there is a little bit more uncertainty that global markets will have to deal with. Keep in mind, if these Treasury yields reprice, it could mean the repricing also of many equity valuations that use U.S. Treasury yields as a benchmark interest rate for some of those valuations at the moment. And again, just quickly, the U.S. dollar, taking a look at where it's trading right now, and it is whistling Dixie upward to about 97.83 right now, just inching higher now. But we're also seeing the likes of the Japanese yen and the also is just a little softer. Again, flat to the upside, flat to the downside, that is, for the yen, while the euro against the US dollar is actually gaining just a little bit of ground right now, while sterling going the other way, just trying to find its footing also, but also looking a bit skittish ahead of that very important potential government shutdown stateside, about 4 minutes and 50 seconds away from that. Well, that's all the time we have today on Inside India, but keep watching CNBC. Access Middle East is up next, and we'll find out whether or not we are dealing with a shutdown out in the United States. So go away, but do have a great midweek.